As we look at the markets today, it's kind of like a race car. It's out there on the track. It just set the new high. You know, it's looking great, but it's got this bulge on the tire on the side. And it either is going to have a very serious problem of a blown tire, or it's going to need to come in, to the pit stop. And why do I say that? Well, we see that the appetite for risk has really gotten high. We look at junk bonds, for instance. We've just set a record in terms of issuance of junk bonds here. The other thing that we've seen is that we have kind of an upside down market. In the last quarter, we saw what we would call the lowest quality stocks did much better than the highest quality stocks. And that's not a very typical pattern. But the thing is, this has been going on for a long time. In fact, for about 12 years. And the last time we saw a 12-year pattern like this of value being crushed by growth was ended in March of 2000. And in the next 7 years, you had value just doing great, and you saw growth going down. And so we think we're in one of these transition periods. The pit stop is needed, and it's going to be a change. It's a sea change, we think, that's coming to the market, and we're seeing the first signs of it right now.
What is that? But I guess it becomes a self-fulfilling prophecy, doesn't it? A lot of people start chasing the same stocks, afraid to miss out against their peers and look bad in the mutual fund rankings. So what are you saying? You're saying that tech is finally going to come to a halt, and that the usual older cycle stocks, or the older economy stocks, are going to have their day in the sun?
Yeah, that's exactly right. We've seen these FANG stocks, the Facebooks and Amazons, just running, and leaving everything else behind. But we're starting to see just the first vestiges of these kind of not so glamorous stocks. Some of the ones that I like a Western Digital, while it's just a hard drive company. We also like United Rentals, the largest equipment rental company in the world, and Aaron's, which rents TVs and furniture to people. Not real sexy, but all meet the criteria we look for, which they're cheap by earnings. They've got good. By valuations, they've got good earnings, and they've been advancing in price. And so we really think that these have a long way to go. The next few years are really going to favor the value-oriented types of stock. And we think that's a good place to have in your pit stop when you're changing the tires. Get into those types of stocks.